Hi everyone and good morning and welcome to today's Morning Report with me, Richard Perry, Market Analyst at Handtech Markets. For Friday the 23rd of May, the trading session in the European hours has begun. Actually, initially was on the stock markets at least, it was fairly flat, but they've slightly drifted away in the early trading as the currencies have also started to fall away as well. So interesting moves there. But the Asian trading was fairly mixed. Not a great deal of um, not a great deal of movement there. The Nikkei was slightly higher, and that came on the back of that with stronger yen. Sorry, that stronger dollar yen, where the yen was weaker, and there were also tensions in Thailand with the military coup, and that subsequently resulted in selling pressure through the Thai SET index. So a little bit of mixed trading in Asia, but it certainly looks like the caution that we had yesterday in these European trading has filtered through again today. There was a pretty flattish to only slight gains on the Wall Street indices. So it looks like Europe remains cautious into trading today. You've got all these European elections that are going on, so you've got uncertainty there, and also news overnight that I think it was 14 Ukrainian military were killed in skirmishes overnight as well. So a lot of uncertainty and caution, I think, in this market at the moment, and that's sort of being reflected in the early trading today. In terms of Wall Street, though, unbelievable. Well, you've still got this VIX index, which actually fell below 12 again yesterday. It actually hit 1180, which is back. I mean, they really are at very low levels on this volatility on the market in the S&P, and that does tend to. That does tend to signal often a topping area in the market where complacency starts to creep in, and it's not an outright sell signal by any means, but it certainly is an indication that investors are beginning to get a little bit complacent, as I said, and I think it's worth keeping an eye on the VIX, as it is at extremely low levels at the moment. If I zoom out, that's back to Q3 2013, so over the course of the past year, that is, and even then further back, it doesn't tend to get below 12 too often, as you can see on this, and it is fairly consistent with market corrections, these moves below 12, so just keep that in mind. On the dollar index, as I said, the dollar has started to find a bit of momentum, certainly against sterling anyway. In the last few minutes, sterling is falling away quite sharply, 25 pips lower, and the dollar has in the past day or so has gradually started to strengthen once more, so that it seems to be the case today. In terms of our announcements, we've got the German EFO that comes out at 9 o'clock, forecast to be at 110.9, which is slightly lower than the 111.2 that we had last month. And also into the afternoon, we've got US new home sales coming out, and that is forecast to increase slightly to 425,000 from 384. But you'll see that in the last few months, you've seen this new home sales figure dropping away, so it certainly could do with an improvement, and to arrest this recent correction that the new home sales figures have had. Housing data in the States is fairly important, and certainly it contributed to the correction that we saw last week on Thursday, where the housing index came in so disappointing. So we'll be watched at 3 o'clock today. Okay, so onto my chart of the day, which is Euro Yen. And Euro Yen, this is over the course of the past year or so, and you'll see that this 144-day moving average, this black line here that we've got, has tended to be the limit of the major corrections throughout the course of the past year, but now we're significantly below that. So that would suggest the outlook is deteriorating somewhat now, and you've also got, if I zoom in quickly here, you've also got the uh, big top pattern here, which completed on a move below 139.90. That is in place as well. That suggests that we're going to be coming back towards the 136 area. If you take the projection of the 143.50 area down to that 139.90 neckline, then that projects lower towards around about 136.50 sort of area. So there is room for more correction. In the last few days, though, however, zoom in even more, there was a slightly positive, you could argue, candlestick on Wednesday where you had a correction and then a subsequent, a decline in that euro yen figure and subsequent rally, followed by a green candlestick yesterday. So there was slight possibility of a rally being seen, but you'd certainly say that that neckline resistance around 139.90 is a big resistance area, and also within this recent decline, you've got several lower highs in place, and you'll see that on the intraday chart. You'll see this consistent decline and the instance of lower highs. You've got back here around about 139.45 is a fairly decent resistance as well. You've got the lows from the 14th of May, and then that came in once more and capped the highs on the 16th. So I'd be using that as a basis of resistance. Also, you've got these momentum indicators that have fallen over again, so it suggests that maybe you'll get a pullback rally is possible, but I don't see it moving too much beyond the 139.30 to 139.45 area, perhaps up towards 139.80, but that is around about where that neckline comes in, and I would be using any rally within this downtrend back towards 139.45 area as a chance to sell, as I think that this euro yen chart is now beginning to deteriorate and move lower, and I think that will be seen over the course of the next coming days and weeks. Anyway, so I wish you good luck in your trading on euro yen today, and I will speak to you later. Thank you.